Okay, hi everyone, and welcome to today's webinar, Gold and Silver 101. I'm Makai Block, Senior Director at American Hartford Gold, the nation's largest precious metals dealer, trusted by countless Americans to protect their retirement savings with physical, tangible gold and silver. And I want to give everybody a chance to kind of get filtered in and just settled in here, a few more people to join the stream. And so while we wait, just write a comment, let me know where you're watching from. It's always good to hear who's on the stream with us, where you're tuning in from. And let me know whether you've bought gold and silver before or if this is your first time. And then also I'd love to hear, is this your first webinar? Have you joined us in the past? It's really good to know if we have all brand new people or if you're kind of following along all the developments that have been happening this whole year. And then also let me know what brings you in today. Is there something specific that you're looking to learn about precious metals? Is there something that you're seeing in the economy that you're joining us for, really hoping to learn about? And the more that you guys kind of engage with us as we go forward, it helps us fine tune these webinars, these presentations, to really give you the information that you're looking for so that we can make this worthwhile for you. But very glad to have you here. So we'll just kind of settle in. Hello, Walter from Michigan, Anthony from New York, Tony. First time buying gold and silver, glad to have you with us. And we're gonna hopefully give you a very good education on why gold and silver, how the process works, and of course, why American Hartford Gold as well. Catherine from Las Vegas, Alfredo, Fontana, California, Lindy from Charlotte, and Chris from Fulshire. I don't know where Fulshire is, but glad to have you here, Chris. Angie, Daniel, Ray, Craig, Michael, really glad to have you guys with us. And again, feel free to write down anything that you're hoping to learn today or just tell us a little bit more about what brought you in as well. At any point in time in the chat, just as we go through the webinar, leave questions. We do have a team that's dedicated to kind of pulling those questions, feeding them to me. I'll have a point later on where I answer some of those. And then also, if you have a really specific question, you might get pulled into a private chat just so that one of our account executives can help you kind of work through that, answer it for you more specifically. So glad to have you guys here. Again, I'm Makai Block, Senior Director at American Hartford Gold. And today I'm really excited to take you all through the essentials of owning physical precious metals and why really they're such a crucial cornerstone of any well-built portfolio, especially in this current economy that we're in right now. So as we go into the second half of 2025, we're well into summer at this point in time, we can look back and we see no shortage of uncertainty in the markets, in politics, in geopolitics across the board, right? Stocks and bonds have experienced some amazing unpredictability and volatility all throughout the first half of this year. And we really have to heed that warning of a coming stagflation recession that's expected to hit the second half of this year as well. I just say that there's a lot of uncertainty across the board right now. And throw on top of that, the loss of the last AAA rating for U.S. debt and the whole world beginning to pull back away from the U.S. dollar as the world reserve currency. And we really begin to see why investors are flocking to precious metals in record numbers in an attempt to find some hedge or safety in their portfolios. And we at American Hartford Gold, we've never seen this many Americans jumping into precious metals, but I'd say that we're really just in the early stages of this as well. And that's no doubt why you're joining us today. You want to learn about gold and silver. You have some concerns about the economy. Look, in our opinion, it's more important now than ever before to understand how gold and silver can really serve as your financial safety net when we're seeing these sorts of things in the economy. So whether you're a seasoned investor or really you're just beginning your journey into precious metals, my goal here today is to provide you with clear, actionable insights on how to secure your investments with gold and silver, whether that be through a cash purchase where we ship gold and silver right to your door, or through a retirement account where you can actually own physical, tangible gold and silver in an IRA. And so we're going to discuss how precious metals fit into a well-rounded retirement portfolio, the outlook on gold and silver prices, and of course, how American Hartford Gold can get you started easily and confidently. And if you do stick with me to the end of the webinar, I'll discuss how you can qualify up to $15,000 in free silver on your first order. It's really our way of saying thank you for taking the step towards securing your financial future with American Hartford Gold. And so it looks like we do have a good number of people coming in here. So we'll just jump into a few of the points that I'm going to cover here today as we go forward as the overall state of the economy, government debt, deficits, the state of the US dollar, perspectives on gold and silver, their current and future growth outlooks, how to invest into precious metals, of course, whether that's as a cash investment again with us or through a qualified retirement account, and then of course why you should feel confident purchasing through American Hartford Gold. So I'm going to just jump right into the economy overall. Let's take a look at kind of the overall of where we've been this year. Right, earlier this year, as we headed into summer, all eyes really had been on the stock market following tremendous volatility that we saw back in April, which followed the uncertainty caused by that first initiation of the Trump tariffs. As a reminder, we saw the stock market drop 20 to 25%. We entered into bear market territory, and there's no doubt that all of us, myself included, saw a major impact in our portfolios with that happening. And that was kind of the first poke and prod of maybe we need to start making some moves and some changes to how we're allocated here. That really drove a lot of people into precious metals. And so eyes have been constantly watching, where's the stock market going to go? As of right now, we've had this really nice relief rally. It's brought us back basically to even. And then, of course, investors are wondering what comes next? What comes down the pipeline with markets there? And while the stock market still carries plenty of risk, the real trouble that I want to talk about today is not just the stock market, but the declining US dollar and increasing government debt, because that's really behind everything. Okay? The dollar just had its worst first half of a year in 52 years, the worst we've seen since 1973. The dollar's weakening significantly right now. It's down 11% so far this year, and the bond market has shown weakness and dangers. Investors, at least for now, seem to have lost a tremendous amount of confidence in the U.S. system and assets. We're all waiting patiently to see if that confidence can return, or if resuming the Trump tariffs in August, which come back on August 1st, will push investors, both foreign and domestic, further out of U.S. stocks, bonds, and the dollars, which of course would compound this whole mess. And so there is, again, a lot of uncertainty as we finish up July and we go into August 1st where those Trump tariffs come back online. What does that do to markets? What does that do to the dollar? What does that do to investor confidence? And we already saw a taste of that back in April. So we've seen major countries, institutions, and investors all beginning to sell bonds and sell out of U.S. stocks. And instead of staying in the dollar, there's this major trend of that money shifting towards precious metals and other currencies outside of the U.S. dollar for stability, which we really have never seen before. So this is a brand new thing that the U.S. is facing. And again, a lot of trepidation with how that's going to play out. It's very important to note that the general consensus among economists earlier this year is that the U.S. really has officially lost our safe haven status, where bonds and dollars have traditionally been considered the safest asset classes in the world. Smart money is now proving that gold and precious metals may be the only reliable safe haven left. So we've seen that gold has risen nearly 30% so far this year, silver following suit. It's charting new all-time highs on the gold side. Silver's up about 27%, and it's very well agreed upon by most economists, analysts, and investment banks that precious metals will continue to rocket forward with much more growth this year and beyond. So we're really just getting started on that side. And the one thing that I really want to drive home here today is that all of the volatility and the uncertainty that we saw back in April, again, caused by the first implementation of the Trump tariffs, is expected to come back in a very serious way as we approach August and the end of that 90-day pause, which Trump just extended off August 1st. And we're supposed to have 90 trade deals in that 90 days. Right? We're supposed to have all this worked out. We've got 3 on the table right now. And so as those tariffs resume, all of that volatility, again, was caused by the way that we approach these other nations and the tariffs and the trade war, and nothing is fixed on that side. We've just basically pushed pause for most of the summer, but what happens when that comes back online? So while stocks are really a major indicator that many of us pay attention to, It's easy for us to be lulled into thinking peace and safety in our portfolios when the stock market is kind of at new highs right now. But the real economy has been showing very significant cracks that can easily catch us all off guard, right? To be frank, what really matters to all of us is the US dollar, and that's what all of our investments are ultimately priced in. And we're facing this existential crisis with the dollar, unlike anything the US has seen before, and things are just getting heated up on that side. If the dollar is going down, we need to hedge outside of the dollar-based assets, right? We have to have something that's not priced in US dollars alone, and that's where precious metals really come into play in a portfolio. So I hope that's making sense for you guys. It's incredibly important in times of uncertainty and economic volatility that investors like you and I really begin to wake up to the madness and look for a more comfortable place to park our life savings and ride out that uncertainty. You know, we've got to heed those warnings given by economists, billionaire hedge fund managers, analysts, and investment banks to prepare for what's coming. And those alarm bells are really ringing significantly louder right now than they have been over the last couple of years. So that's what we're here to talk about today. What are they warning us about? What's actually going on? And of course, how can we look to precious metals for safety in these times? So just to kind of wrap all that up, again, gold is up 30% so far this year. Silver's up about 27%, a little higher today actually. Platinum's up 35%, and all have posted returns well above 20%, which is far outpacing traditional US financial assets. So we always get comfortable with what we're familiar with, stocks, bonds, equities, CDs, but you look at gold and silver and precious metals and they're far outperforming those traditional investments. That's happening for a reason. So that's kind of the summary. We're going to get into more of the meat of it, but again, at any point in this webinar, if you want to chat directly with our account executives, I would encourage you to call the number on the screen. And of course, I want you here with me throughout the whole webinar. You're going to learn some stuff, but I'd rather have you talking directly to our account executives about your specific scenario and, you know, getting your questions answered one-on-one. So call the number on the screen, which is 866-607-2447. And you can really have a more in-depth conversation. Hop off the webinar anytime, and you will get a replay of this. But, you know, of course, I want to encourage you to stick around as well. I just want you to be able to get the cleanest, smoothest path to getting the safety that you're looking for here. Leave your questions on the message board at some point here a little bit later. I will have those fed to me so that I can go back to them, and we'll spend a little bit of time going through that and answering them for you. And then keep in mind that anything that you write in here is really helpful for us to know how to tailor these in the future. So I do appreciate you engaging and writing your thoughts in that comment section there. One more thing, of course, this is not financial advice. Anything that I tell you guys is really just coming from our experience, our research, and you have to do your own. But what I'm trying to do is point you to what we're seeing and help you make sense of the economy. Of course, you know, make your own decisions based on your scenario. I know nothing about your personal situation, okay? As mentioned, we're seeing some really crucial hinge points in the US economy and the US dollar right now as the world reserve currency. And that's probably the biggest thing that I want to talk about today outside of just how to get into gold and silver. We're really beginning to see slowing growth in the US. Job openings have been steadily decreasing since 2022, and that drop is actually picking up speed right now. And even though the stock market has been going up, and it feels really kind of peaceful and calm right now, the real economic outlook is actually getting more and more bleak, and it does continue to deteriorate, and all of that gets lost in the noise of a booming stock market. So despite the handful of positive developments that we've seen in the economy, there's still this overall breaking down, and it's important that we kind of filter through that noise. There's what's called the leading economic indicator, the LEI, and it's a widely consulted index that assesses the health of the US economy. And significant declines in the past have really been correlated with periods of significant economic downturn. And that LEI actually just had its 6th consecutive monthly decline. So that's huge. It's worth noting that the strong rebound in the market really was not sufficient to offset the other metrics that were causing the LEI to go down. Those things were lower consumer expectations for business conditions, persistently weak demand for manufactured goods, And of course, those 6 consecutive drops have now pushed the index into a range that typically in the past has signaled imminent recession. So again, we don't know exactly where the economy is going, but you look behind some of the polished things that are happening, like the stock market going up, some of the trade deals getting put on the table, and there's really a lot of breaking down that's happening behind the scenes. So it's really important for our portfolios to know actually what's going on here. JP Morgan Chase CEO Jamie Dimon, who's one of the most well-respected men on Wall Street, says that the U.S. economy could soon deteriorate and that they as a bank are taking precautions to brace for that scenario. There's been an overall weakening confidence around the economy from consumers and business leaders, and they said that we're seeing the employment begin to diminish and inflation is back on the rise. Now, on top of this, U.S. consumer credit card delinquencies have actually hit their highest level since 2011. So on the individual level, people are kind of running out of money and getting themselves into tight situations, which will have a rippling effect on the overall economy. If consumers are out of money, if they're defaulting on their credit card, where does that mean for spending, for growth, for the overall outlook of the economy as well? And inflation rose in June as the impact of Trump's tariffs have really began to work their way through the economy. Tariffs will often lead to higher inflation after about a 2 to 3 month period. And that's what we started to see as inflation is already going back up. And it's going to be really difficult to predict the magnitude and the length of that trade war's impact. And then, of course, in August, as those Trump tariffs come back online, how much further do we go into this kind of tug of war back and forth, which will create more uncertainty and more inflation. And then earlier this year, BlackRock again predicted that inflation would be back around 7% by the end of summer. And so that's what they're keeping their eye on, and we do see inflation ticking back up. So with inflation rising and the economy slowing down, economists are really fearing that the U.S. is headed for a 1970-style stagflation recession. And that can be just crippling to traditional investments. Inflation, again, is expected to continue to pick back up in the third quarter, and interest rates are expected to really remain steady until spring of 2026, so there's no relief on that side. The global economy is expected to see its slowest growth since COVID, and then governments, of course, in that scenario will begin spending more to increase growth, and that creates bigger deficits, bigger inflation. So there's some huge issues going on across the globe right now, not just here domestically. And this brings us to a really important point about debt. Right? The government debt right now looms at $37 trillion. And no matter what we do, we're only spending more and more. The big, beautiful bill that just got passed, that's adding to the spending. It's not fixing it. It's creating an even bigger deficit. So getting the budget under control is seemingly impossible right now. And as we head for that higher government debt, it's really just a train wreck waiting to happen. We see economists and analysts really beginning to warn about a debt crisis that's coming because of that. Ray Dalio, if you guys are familiar, he's the founder of Bridgewater Associates, the largest hedge fund in the world. He says that the government debt situation is now nearing a point of no return. It's approaching a death spiral where there's no escape, and that could threaten the stability of the world's largest economy. Ray Dalio has been one of the most vocal proponents about getting us out of this debt crisis before it's too late. The current U.S. deficit is on an unsustainable path. It's more than the market can bear. And Dalio told Bloomberg that America has maybe 3 years, give or take a year, before the U.S. is in a critical situation. Jamie Dimon, again, CEO of JP Morgan Chase, says that China isn't America's biggest threat. It's the enemy within, meaning our debt and our currency crisis. And he says that we should be very afraid of the bond market and the warnings that it's giving us, and that the bond market will crack. Now, that's $30 trillion in that market. And if that's posting warnings and that's cracking, that impacts everything. And he also says that a recession is the most likely outcome for the U.S. So again, these are people that are paid to be right. They built their entire investment careers on watching the economy and understanding it in a way that you and I probably can't. And what are they saying about where we're headed? And he's joined by many economists and investment banks that expect the U.S. to enter into that stagflation, and that there's really no escaping that right now. So again, we feel good in this moment. The summer's been good to us. The stock market's up, but where are we actually headed behind the scenes? Now, on top of all this, we have just incredible political infighting between Trump and the Federal Reserve, with Trump going after Fed Chair Jerome Powell and weighing the option of potentially firing him or getting him kicked out. Now, this is a move that Deutsche Bank said this would absolutely collapse the currency and the bond market if that happens, if that confidence in an unbiased and non-political Fed is lost in the U.S. So Trump did call Jerome Powell one of the dumbest and most destructive people in government. You know, he's kind of refrained from those types of insults to Jerome Powell in the past, and now he's just straight up going after him, and so that's escalating. And Trump has been calling for lower rates, noting that the Fed is actually costing the country billions of dollars in interest payments by keeping rates high on our $37 trillion in debt. So he wants those rates to come down. He's really trying to push the Fed to lower rates. The problem is, if we lower rates, we see inflation go back up higher. And that's really why the Fed is refusing to cut interest rates right now, because there's very high uncertainty due to tariff impacts, and they're fully expecting higher inflation to take shape, and so they can't cut rates early. The real danger for investors in this is that if the Fed does buckle under that political pressure and they cut rates too soon, that could unleash a second wave of inflation, which might actually be more entrenched than what we saw after COVID, right? So we just have this major battle to get inflation down, and if the Fed cuts rates now and it goes back up, we're really up a creek at that point in time. So if that happens, you know, we really would have to expect a very sharp reset in asset valuations, a spike in bond yields, and then a steep correction in the S&P 500. That's what economists are warning us about. Cutting interest rates before inflation is fully fixed risks igniting more persistent cycle of price increases, forcing the Fed to respond later with even more aggressive hikes, just as it did in the 1970s when inflation spiraled out of control with those three major waves that we saw. So consider this. Back then, the Fed delayed tightening and it led to stagflation, and then a severe equity downturn. The S&P 500 fell nearly 50% between 1972 and 1974. And what's more is today, higher valuations coupled with policy uncertainty could actually make things much worse than what we saw in the 1970s. So that's what we have to be paying attention to here. So look, I'm going through a lot of details with all of you right now, but if you didn't think all that was reason enough to run to the safety of gold and silver, the biggest issue again is the US dollar. Right, the US dollar is down 11% the first half of this year. It's the worst 6 months that we've seen in 52 years since 1973. And if you remember, that was 2 years after Nixon took us off the gold standard. So it was the very beginning of the decline of the dollar. And to see the dollar dropping the way that it did back then should really tell us something. Gold's just had its best 6 months since 1979. Right, so the dollar, the worst 6 months, gold, the best 6 months. That's not a coincidence. Gold will always move inversely related to the dollar. And again, UBS called the dollar unattractive in a memo to its clients. So UBS, one of the most prestigious investment banks out there, writing a memo to all of its investors saying the dollar is very unattractive right now. It's got further declines expected as the economy slows, and foreign vendors are really beginning to ask US importers right now to settle in other currencies outside of the US dollar. That's something, again, that we have never seen before. Traditionally, all trade happens in the US dollar, and now foreign vendors are calling on US importers to actually pay them in things like the euro and the Chinese renminbi. So, huge issues with that. 16% of central banks right now have decreased their holdings of the US dollar. In 2024, it was only about 11%. So that central bank dumping of US treasuries and US dollars is accelerating at this point in time. And the US dollar is really it's the only currency that central banks are unloading and reducing their exposure to. So 90% of central banks remain very bullish on gold, despite the fact that gold is already at these high prices. They're loading up on gold instead of US dollars, okay? The next thing to kind of go into here is the bond market, and the bond market underlies everything. It's really the source of confidence in American exceptionalism. It's the lifeblood of any economy, and both Ray Dalio and Jamie Dimon again have warned that there's significant risk showing in bonds that investors need to prepare for a major disaster. The bond market is going to crack. Jamie Dimon says, I'm telling you it's going to happen, and you're going to panic. And so there's this great potential for bond market panic, increased government debt, and market instability. And investors really need to be shifting to hard assets in that environment, outside of the US dollar and outside of US treasuries. And because of the government's immense borrowing that we see right now, the US debt, again, no longer has a AAA rating. So losing that means that the safe haven status of the bond market and US treasuries has been completely lost as well. And this has huge implications for the future of investing. The more we borrow as a country, the greater the risk becomes to creditors. That increases the interest cost to that debt. Therefore, we go into more debt by servicing the debt that we already have, more spending, a further decline in the dollar, which means more risk to investors, which means more debt, and that cycle just perpetuates, and we end up in what's called a debt doom loop or a death spiral, which is really inescapable. And again, that's what these economists and analysts are warning us about, is that we're at that point of no return, that the U.S. is about to fall off a cliff. And that is why the U.S. dollar has been plummeting this year, is all of that is happening and it's escalating. Right, so Goldman Sachs, they have top experts that are sounding the alarm again about a debt crisis. And if you remember, April saw a huge crash on the bond market. This was really just the first warning. The fact that the bond market was dropping back in April says something dramatic about where we're going into if things continue this way. Now, this drives foreign investors away from investing in U.S. assets and dollars and U.S. debt. And that's why we saw the stock market crashing along with the bond market, because money was fleeing the U.S. system. So if we continue to persist on this cycle, how much worse do things get? And that, again, is the alarm bells that are being rung right now. So, keep in mind the big, beautiful bill that got passed. It's adding trillions of debt and budget deficit over the coming years. So things are not looking up. They're not getting addressed at the highest levels where we need them to. And again, we really are at that inflection point. And there's three things that really need to concern us about the debt. We have to pay attention to these. How much is the government paying on that debt interest? That takes away from vital funding of other parts of the economy. So as our interest service goes up and up and up on that debt, the U.S. has less money to spend on other parts and other sectors of the economy. How much debt does the government need to sell, right? We have to finance our fundings, the government, so they have to sell these bonds, they have to raise money. How much debt do we need to sell in order to keep the government afloat? And do people actually want that debt? And I think what we're seeing this year is the answer is no. People are pulling away from U.S. treasuries, and we're not able to sell the same amount that we were in the past, especially losing that AAA rating. Is there demand for our debt? Is that low demand going to drive up interest rates and hurt the economy? And that's why we see these yields on bonds going up dramatically right now. And then the last thing is how much central banks need to print in order to buy that excess debt. So if foreign investors aren't buying U.S. debt, if domestic investors aren't willing to buy U.S. treasuries, the Federal Reserve has to print money to then buy that debt and finance the government, which leads to more debt, which leads to a further devaluation of the dollar. So we're really in this just, horrible situation right now, and that's what we've been seeing over the last 6 months. And then again, I brought up Ray Dalio a lot, but I just think it's so permanent. He says that you can easily measure all three of those signs of deterioration and see movement towards this impending debt crisis. We're gonna have a supply and demand problem for debt at the same time as we have these other problems. And the result of that is that it's going to be worse than a normal recession. He says that the very value of money is at stake here, and a breakdown of the bond market combined with events like internal and international conflict could be even more severe shock to the monetary system than President Richard Nixon taking us off the gold standard, and an even bigger shock than what we saw to global financial crises in 2008. And then Dalio also said that Moody's downgrade of the U.S. credit rating does not take into account the risk of the federal government printing money to pay its debt. So again, the Fed printing money to buy that debt and finance the government, that risk to U.S. Treasuries is even greater than what Moody's is saying and why they downgraded us in the first place. Bondholders would suffer losses due to the depreciating value of that money that they're getting paid. And so again, the dollar just further falling, further eroding away. And the dollars that you and I hold on to, even if we don't own bonds, those dollars are losing their purchasing power. The stock market, even if we're seeing our stock prices go up, every stock is priced in a failing US dollar. And so even if we see this major jump on our stock portfolio, the real value of what we have there is decreasing. And then he also says that if you think things are bad now, wait until the US can no longer find a buyer that's willing to buy our debt, and that may be happening now. So, just again, tremendous issues across the board with where the dollar is headed. Our national debt is around $37 trillion. Interest rates are paying $1 trillion, or to service that debt, our interest rate is about $1 trillion. And then government deficit, we have the government spending $7 trillion every year. It takes in about $5 trillion. And so our deficit is $2 trillion, which means that every year we're adding $2 trillion to that debt at a minimum. And then it's costing more and more to service that debt. So I've kind of beat this horse a few times here. I hope you guys get the sense of where we're headed and why it's so important. But this is how countries go broke. We're actually expected to add $20 trillion in the next decade. So for the US going from $37 trillion to $57 trillion just 10 years down the road, what does that do to yours and my money? And that's a question I really want you to sit with. Where is the US actually headed? How are we ever going to get out of this scenario, adding $10 trillion, $57 trillion in debt in the next 10 years of our life? We better do something today to start protecting ourselves. So on top of that, you throw in the risk of an escalating trade war, geopolitical turmoil and conflict, which is expected to continue on, and a world that is intentionally de-dollarizing and pulling it back again away from US assets and away from the US dollar. The fear here is that a weaker US dollar is really just one segment in a chain of causes and effects that could lead to economic chaos. The bond market is teetering on the edge, no longer considered the world's safest assets, and this is a warning for us. If the dollar is losing value and investors are losing confidence across the board in the American system, even a small shift away from US assets can cause huge damage to our portfolios. And we again saw that warning back in April. So this is why gold and silver is so important in this environment, because we need something that's not tied to the US dollar, and that is gold and silver. They're priced outside of just US dollars. So I'm going to answer some of your questions here. As I kind of read through this next part, leave me some questions that I can dig into with you guys, and we'll just spend a couple minutes going through that. But again, I just want to remind you, at any point in time, you can call the number on the screen, 866-607-2447. And then we can discuss all of this in more detail with you specifically, as well as your personal situation, really to get right to the heart of what's important to you. We do have account executives on standby waiting to take your call. And so call us directly, 866-607-2447, and they can jump right into it with you. And then again, you will get a replay of the rest of the webinar. And so I do want to take a couple of minutes just to jump into the questions that have been passed to me. I appreciate you guys leaving those in the chat and continue to do so as we go forward here. We have Anthony says, I'm interested in tax liability when converting funds from a qualified retirement plan like a 403B. I'm also curious about the fee schedule conversion and storage of precious metals. So great question, Anthony. I'm going to get into a little bit more detail on how all that works. But to give you a quick overview, there's no taxes to roll out of a qualified retirement account. So if you have an old 403B, IRA, an old 401k, or an employer plan, you can roll funds out of those IRAs into what we call a self-directed IRA. This allows you to hold on to physical, tangible assets in your retirement account rather than just your traditional stocks, bonds, equities, and the dollar. So we open up this new account for you. It's just a lateral move from retirement account to retirement account. So it is tax-free and penalty-free to do that. There's no limit on what you can move over. And then as far as fees, again, I'm going to cover this in more detail, but there is a $225 a year storage or custodial fee that covers everything. That's really the only fee that you're going to have to worry about. We as a company will cover the account setup and the first year of storage for you. So it's really at year 2, $225 a year to own gold and silver in your retirement account. And that's it. Very straightforward. Walter says, I'm 54 and I just left my previous employer. Can I move my IRA into gold and turn it into a gold IRA? So yes, if it's from a previous employer, you can roll those funds over at any point in time. If you're still currently employed, typically your employer will keep your funds tied up in the retirement account until you're 59 and a half. So if you're currently employed and you're over 59 and a half, you can move funds out of your retirement account, again, tax-free and penalty-free. If you're under 59 and a half, typically it's going to have to come from an IRA or a previous employer's retirement account. But again, we can roll those funds over tax-free and penalty-free. And again, we do all the heavy lifting to help you do that. It's very straightforward and simple. Chris says, sounds like third world economy scenario in the 1970s. Yeah, that's the main concern that we're going through here, Chris. I'm glad that that's landing for you. It's not just me. Look, I'm concerned. I'm in this every day, reading the news, getting educated on this, so I'm very passionate about it, but it's not me, Mackay, the gold salesman, senior director at American Hartford Gold, trying to tell you to get into gold. These are things coming from the top economists, the top billionaire hedge fund managers, the investment banks themselves, Deutsche Bank, UBS, Goldman Sachs, saying get into gold and silver. There's a reason for that. You know, we're headed into a very, very concerning time for the U.S. economy. And again, I think it's never been more important than now to own gold and silver, and we see gold and silver growing and responding because of that. Karen says, can you purchase a gold IRA? So Karen, you really have to have funds already in a retirement account, an old 401k, employer plan, an IRA, or be over 59 and a half and have a current employer account to roll those funds over. You can't really just start a new gold IRA. The minimum there is going to be $10,000 to get an account open. And the maximum you can contribute to any, retirement account, any new IRA in any given year is going to be about $7,000. So there's no way to open up a new IRA if you don't already have funds to roll over. But if that's not your scenario and you still want to get into gold and silver, you may not need to open an IRA. You may just do a cash investment with whatever funds that you have that you want to protect, and we can ship that gold and silver right to your door. And then Naresh says, can you please touch on how to open an account and buy physical gold? Yes, so I'm going to jump into that. I just want to, kind of go through this last bit about where gold and silver are headed, and then I'm going to walk you through how you can actually open up an account, whether that be a cash investment or a retirement account, and I'll give you all the details. So let's touch on the last couple of points here, and then we'll explain the process, and of course, why American Hartford Gold as well before we wrap up. So the next point that I think is really important is just where is gold headed? And I'm going to put it to you very simply. In times of economic uncertainty, again, investors flock to gold. There's a reason for that. When the dollar is losing value, precious metals will increase in value, and we see that happening. So gold is being bought up in record levels by central banks right now. When traditional markets are choppy, investors move to gold. And we see that not only on the retail side, but the institutional side, as well as big money, is leaving the traditional system and it's moving into gold. So there's this wave of capital that is consistently flowing into precious metals. And the gold rally this year that we've seen should really give you the confidence that you're looking in the right direction. This year, gold is up about 30%. But during the last bull runs for precious metals, it wasn't uncommon to have gold grow 130% in a single year. And so we're just getting started with the growth that we're expecting. Ray Dalio, again, has been noted as saying, you think that $35 to $3,500 was a big move for gold? It's peanuts compared to what is going to happen as the U.S. enters into this debt crisis. So there's tremendous upside on gold yet to be had. And, we had Nitesh Kaneva, who's the head of global commodities strategies at JP Morgan Chase. He says the chance of a recession and global trade risks make $4,000 an ounce target on gold very possible, right? So, we're sitting about $3,400, $3,500 an ounce on gold right now, getting to $4,000 that next level, and many investment banks are saying that's right around the corner. You've got UBS, Goldman Sachs, other analysts at JP Morgan Chase calling for gold to hit somewhere around $4,500 to $4,700 an ounce by the end of this year. So really that growth is just starting to happen. Again, analysts at Bank of America see gold hitting $4,000 an ounce within the next year, really because of that ballooning fiscal debt in the U.S. And they see Trump's big, beautiful bill is raising concerns about the sustainability of U.S. debt and the future status of the dollar. And so they're pointing to this growing trend of global central banks shifting away from U.S. assets and the reserves and holding more gold than what we've seen them do in the past. There's this ongoing apprehension over trade and U.S. fiscal deficits that may well divert more central bank purchases away from U.S. treasuries into gold, which will drive that gold price higher. And in a basket of currencies that are used for that reserve currency, gold is actually now the number 2 world reserve currency in the world behind the US dollar. So gold is quickly taking that positioning, which again, we haven't seen in really ever. So a very new scenario coming online right now. Central banks have again continued to accumulate about double the amount of what they've averaged over the last decade. 95% of central banks are expected to increase their gold reserves, which is the highest figure that we've ever seen. And much of that gold buying has been foreign central banks diversifying again away from US dollars. So that will cause further drop to the dollar, further price appreciation on gold. So you're getting kind of this double angle there. And then people, just individuals, are now starting to reallocate to gold. It's very small as far as a percentage of the population that's actually getting into gold. But as we go into these panic scenarios where we see the markets dropping, there's waves of investors that come in, and that's where you get tremendous growth in gold and silver. And so there is still expected a lot of growth up ahead. Okay. The last thing that I would say on this, JP Morgan Chase has also come out and said they see gold at $6,000 an ounce if even a minuscule shift happens away from U.S. assets. If just 0.5% of U.S. assets held by foreign investors move into gold away from the US dollar, we could see gold at $6,000 an ounce by 2029. So if you think that you're late to the game because gold has already grown, you're very early. Okay, I want to drive that point home to you. We'll touch on silver just very briefly here. Silver is starting to wake up in a way that we haven't seen. It just hit a 15-year high, broke that level today. It's even higher up. Silver is facing a very potential breakout year right now. There's this natural ratio between silver and gold of about 16 to 1. Right now, we're stretched to about 100 to 1, which means 100 ounces of silver is about the same price as 1 ounce of gold. We've really only ever seen this ratio this out of whack 2 other times in history. Both of those times were in the previous bull runs, and silver broke over $55 an ounce each of those times. So we're sitting about $40 an ounce right now. Going to $55 an ounce, that's not a stretch at all. In fact, you have economists calling for silver to hit somewhere around $70 or $80 an ounce just by the end of this year. So, again, the only other time that we really saw the balance this bad between gold and silver was during the initial COVID panic in March 2020. That ratio hit about 113 to 1. And in the 12 months following that episode, silver prices rose 73%. And gold rose about 8%. So silver can far outperform gold in these environments, and it's just now starting to wake up. Gold, again, has been steadily climbing, but history shows that silver will always move later and then make bigger, faster, and much more monstrous moves than what we see gold do. So silver is very primed for good investing right now. And I would say, as you have those conversations with our account executives, as we're looking to build out a portfolio for you, we'll really get into what's important to you and build out a mix of gold versus silver that's right for your situation. One more thing, silver again, just kind of trading at a fraction of its all-time high, whereas gold is in this new exploratory phase above its previous level. Silver still has a lot of room to grow before it hits that previous all-time high. And so really, common sense would show us that silver has a lot more growth up ahead, and we're just starting to see that. Silver is really where gold was 2 years ago, deeply underowned and on the verge of explosive revaluation. And unlike gold, silver has scarcity, real-world utility, and very embedded leverage. There's tremendous industrial use on silver that's only increasing right now. So I hope that gives you guys a sense that we still are very early. We would say we're in the first or second inning of about a 9-inning game. So if you're looking at getting into gold and silver, but you're just kind of unsure because you've seen it run up, just have the confidence that we're still very early with all of the conditions that would push gold and silver significantly higher to where they're expected to go. Now, let me just talk about the processes in more detail because this is what you guys came for as well. I hope the little economic kind of preview gave you a sense of why gold and silver and helps validate some of your concerns that you're seeing and point you to gold and silver being a very good answer for you. But the way that it works to get into precious metals, there's two ways that we help our clients at American Hartford Gold. The first way would be a cash investment. So if you have cash in a brokerage account, outside of an IRA, just sitting in a bank, a CD, whatever it may be, and you want to get that money on the cash side into gold and silver, it's really as simple as a wire transfer or a check over to American Hartford Gold. So we'll build out a 7-digit client ID for you. Again, you can call us at that number on the screen, 866-607-2447. We'll get some information from you and build out an account. We'll send you wiring instructions and payment details. You can do a wire transfer directly from your bank to American Hartford, or you can write a personal check. We can even set up FedEx to do an overnight to us with that check, so there's tracking on it. It's just a very smooth process. Once we have the funds in-house, and the minimum on the cash side is $5,000, so anything above that we can help you with. 5,000, 25 million, we don't care. It's more about protecting what you have that you want to get into precious metals. But once we have those funds in, again, you'll talk to one of our senior directors. They'll sit down and get to know your situation a bit more in depth. What's important to you? What are your time horizons? What are your investment objectives? And we'll help build out a portfolio of precious metals that fits your needs. We'll select those metals. We'll ship that gold and silver right to your door. It's fully insured. We cover the shipping cost. There's no sales tax on that at all. And typically we're shipping via FedEx. You will sign for it on your door. There's no liability on your side until you sign for it and actually take possession. So a lot of times clients get a little freaked out. You're going to ship gold and silver to my door. How does that work? Well, the reality of it is we take all that burden. It's fully insured. There's no liability to our client. You will sign for it and take possession of that gold and silver, and then you own it. You can do anything you want with it. It's a very smooth process. We've shipped billions of dollars worth of gold and silver around the country this way. It's really seamless on our end. We do have a buyback commitment. So if you ever want to get back into cash, of course you want to sell your gold and silver once you've seen the profit. We do have a buyback commitment to our clients. We'll buy back with 0 fees on our side. So again, a very simple process anytime you need to do that. That's the cash side. So again, cash in the bank, brokerage account, anything outside of an IRA you want to get into gold and silver, we can help you with that. The other side is retirement accounts. So a lot of our clients have the majority of their net worth tied up in old 401ks, IRAs. They're very concerned about the kind of future projection of what they've worked their entire life to build up for retirement. And you can actually put physical, tangible gold and silver inside of a retirement account. It's not paper gold, it's not gold stock. You can own physical gold and silver in your IRA. And this is good for an old IRA, anything outside of your employer account. If you have a 403B, 401k, whatever it may be on the employer side, if it's from a previous employer, it's very easy to roll over. If it's a current employer, we can look into that with you, but typically you're going to have to be over 59 and a half. Or if you've ever rolled from a previous employer into that current employer account, usually you can take those funds out as well. This is all done tax-free and penalty-free. And so what we do is we open up what's called a self-directed IRA. This is the type of account that allows you to hold on to physical, tangible assets in your retirement account, again, rather than just stocks, bonds, equities, and paper assets. So it gives you more flexibility. We work with a really fantastic company that is the custodian on the account. So we open up that account, we do all the paperwork for you, just send it over to you for a signature, and then we would schedule in a custodial call where our team of processors in our back office will call over to your current custodian, help you liquidate whatever funds you want to roll out of that account. And it can be a partial rollover, it can be a full rollover, whatever amount you want to move and protect, we'll help you do that. So we'll get the transfer forms together. We as a company will keep our thumb on that process the entire time until your account funds at the new custodian in the self-directed IRA. And then again, when those funds are available, you'll sit down with one of our senior directors. We'll do a phone call, get to know your situation, really spend a good amount of time getting to know what's important to you, and then building out a way to protect and preserve that retirement account in precious metals for you. A mix of gold, silver, platinum, whatever it may be. And then we'll select those metals alongside of you. We don't expect you to become a precious metals expert overnight, but we really do want to give you a good lay of the land and help you get a sense of at least what we're doing here. But our experts will help you build out a portfolio, and then we ship that gold and silver to a private depository. So this is a third-party vault. It's outside of the banking system. just a private company that's meant to store gold and silver. It's all IRS approved, and it's it's under lock and key, armed guards, the whole 9 yards, and fully insured for you. So your gold and silver in the retirement account will be stored at a private depository. Typically, for the storage and custodial fees combined, it's going to be $225 a year. It may be $275 if you're going to do segregated storage, which means it's in a room all by itself. But either one of those, $225 for non-segregated or $275 per year for segregated. So it's very moderate. And American Hartford Gold, again, will cover the account setup and the first year of storage for you. There may be scenarios where we can cover multiple years. Again, those are promotions that we run from time to time. So just call us on that number, talk to one of our account executives, and they can discuss your specific situation and see what's going to work for you. But either way, we'll cover the account setup in the first year of storage, and then typically $225 per year after that. That fee covers everything. There's no other fees to be surprised by. That's going to cover the entire retirement account. And then your gold and silver sitting there growing outside of the banking system, outside of paper assets. And at any point in time, if you want that gold and silver, it's actually physically sitting there in a room with your name on it. You can pull that gold and silver out as a distribution on your account and have it sent to your home. You can also sell that gold and silver back to us inside of the account. We'll put cash back in. You can then take a distribution of cash or reallocate those funds elsewhere if the economy is giving you opportunities. So, very simple process. It's just 3 steps. You call us, we figure out what you want to move, we help you move it, we build out a portfolio. That's it. Very straightforward across the board. Kathy says, can a person roll a 529 for the beneficiary to a gold IRA? So a beneficiary account, if you've inherited it, yes, you can move that into gold and silver. It's a very easy process. And a 529 plan, we have to take a look at that specifically because some scenarios you can move those, other ones you can't. 529 is a college plan, so we kind of have to call over to the custodian and see what's possible on that. But a beneficiary account, Kathy, if that's what you're asking about, if it's something that you've inherited, typically you can move that over no problem. Michael says, I'm 74. Should I still go into the IRA for gold? What I would say, Michael, is everybody's scenario is different, but if you're concerned about where stocks are headed, if you're concerned about the value of the US dollar, if you're seeing volatility in that account, and you can get why gold is maybe a better way, providing more stability, more growth in this environment, there's no reason you shouldn't be able to move those funds over and get yourself protected. There's no lockup period with gold. You don't have to look at it this tremendous long time horizon. We're in a very fast moving market for gold and silver. And so there's no reason that at your age you wouldn't protect those funds if that's what you thought was best for you. And I would say that everything that we're seeing shows that gold and silver is probably one of the best places we can be right now. So again, that's a great question. If you want to just jump on with one of our account executives, they can dig into that a little bit more and help you assess, hey, these are my reservations. I'm retired. I want to protect my account, but I don't know what my time horizon is going to be. Those are great questions to get on with one of our directors and really discuss that. Craig says, what type of allocation should we go with? 70-30 gold to silver? Great question, Craig. Again, our directors are going to be best to answer that for everybody's unique scenario because everybody's going to be different. But to give you an overview, we lean on gold for preservation and protection. Typically, we lean on silver for growth. Gold has been doing incredibly well. Silver is just now starting to wake up. And so if you're looking at more of an aggressive portfolio, you probably go heavier on the silver side. If you're looking for a little bit more of a calm, stable portfolio, maybe you go heavier on the gold side. A lot of clients are going to do 60-40 or 70-30 one way or the other. And we'll just kind of dive into that with you and figure out what's going to be best for your scenario based on what you're telling us. So I would encourage you, call that number, 866-607-2447. We'll get right into it with you. Now, Lindy says, if I buy gold with cash, can I have it stored instead of shipping it to me? Yes, we can store it for you, Lindy. There are those depositories that are good for cash storage as well. So if you want to do personal storage outside of your home, our account executives can set that up for you, no problem. And then Chris says, can you please detail a bit on the custodians? So the custodian that we primarily use is Equity Trust. They're a great company, oldest and largest self-directed IRA firm in the US. They've been around for decades, a really good firm, and we work very in tandem with them to make it a smooth process for you. Delaware, so you're asking about the depository specifically. There's Delaware, Dallas, and Nevada. Those are the primary locations where we would have your gold and silver stored. And there's about 4 companies that we work with that are at those locations. There's really not a great difference between them. It's more about locational preference for you. And then, we can kind of discuss those details, but the cost is going to be the same across the board. You can do segregated storage or non-segregated, and our account executives will help you figure out which one is right for you. And then again, what location is best for you. Yeah, you got it, Chris. Guys, that wraps up a big piece, and we're kind of going long here, but the last thing that I would tell you is you're looking at investing into gold and silver. You've hung with me this entire time. I appreciate it. I hope it's been a very good education for you. Why would you go with American Hartford Gold? Right? It's important that you know who you're doing business with and you're spending some time researching, but American Hartford Gold, we're the largest retailer of gold and silver in America. We've shipped over $3.5 billion worth of gold and silver around the country in the last few years alone to clients just like you, just like me, to people that are concerned about protecting their accounts. We take it very seriously. And if you look at us, nobody stands out in the industry the way that American Hartford Gold does. You can look at our ratings, our reviews, A+ rating with the Better Business Bureau, Consumer Affairs, Trustpilot, Google, thousands of positive reviews online. We've been in business for over a decade. And again, countless Americans have trusted American Hartford Gold with their investments into gold and silver. And our whole MO here is to make it a very smooth and seamless process for you to get out of the dollar into gold and silver and then back into the dollar. So you're going to have a dedicated account executive that's going to be with you from start to finish. Gold and silver is a new investment for a lot of our clients. We get that. We know that you're going to have questions. You're never going to be alone in that process. And we really pride ourselves in client services and being available for our customers, as well as pricing, diversification in the portfolio. Because of our size, we're going to be able to get you into better prices than anybody else in the industry as well. It's always important. When you want to sell your gold and silver, we have a buyback commitment to our clients. We buy back with 0 fees on that side. We're the most liquid and well-funded company in the industry, so you're never going to run into a scenario where we can't afford to buy your gold and silver back. That's going to happen with smaller shops. That's going to happen with local companies. If gold goes through the roof and everybody wants to sell and realize that profit, is the company that you bought with going to be financed enough that they can buy your gold and silver back and help you get that profit on the table? With American Hartford Gold, the answer is unequivocally yes. Again, we're the only firm in the industry backed by private equity. It's a very straightforward process through and through. And then what I would really tell you guys, I'd encourage all of you to visit our About Us page. Just go to our website, AmericanHartfordGold.com, click on that About Us. You're going to see our president, our CEO. You're going to see inside of our office, the shipping department. You're really going to get a good sense of who we are as a company and who you're partnering with. No other company provides that visibility. No other company has their CEO and their president writing articles on Forbes, Newsmax, appearing on interviews the same way that we are. We're just out there everywhere, and I'd really encourage you to look in so you can feel like you're really getting a glimpse of who you're doing business with. That's important. And again, what I would say is jump on with one of our account executives and just discuss that in more detail. The last thing here, guys, and I'm going to kind of wrap it up with just a big summary, but I did promise that I'd talk to you about the free silver. So for qualifying purchases of orders of $50,000 or more, for every $50,000 increment that you invest, we give you 1% of your order back in free silver. So up to $15,000 of free silver. And look, we know it's not this great, magnificent number. We're not giving you 10% back like some companies do, where I would really encourage you, if it sounds too good to be true, it probably is. But with American Hartford Gold, we give you $500 of free silver for every $50,000 that you invest, up to $15,000. And that's on your first purchase for qualified purchases. And so if you're thinking about investing $50,000 or more, that promotion does apply to you. We'll make sure that you get some free silver sent right to your home. If it's a retirement account, again, we send that silver to your home, not put it into the retirement account. And then a cash investment that comes out to you as well. So there's some other promotions that we're running as well. If you want to dig into that, call our account executives. We're always happy to discuss and see what's going to fit you. And if you don't hit that $50,000 mark, it's not the end of the world, guys. We still are going to have great pricing. We may have some other promotions that apply to you. We want to help you out whatever level that you feel comfortable investing. So whether it's $5,000 or $50,000 or again, 25 million, 50 million, it doesn't matter to us. We're going to treat you the same way through and through. We're going to take very good care of you here. So call us on that number and let's just discuss what you're actually looking at doing as far as moving into gold and silver. And to wrap this up, last bit of this conclusion here, just to kind of tie it all on a nice bow, and I appreciate you guys sticking with me. The last 12 months, we've seen gold up about 48%. Silver's grown over 30%. The S&P 500 has done about 6%, and the NASDAQ has done about 6%. So gold and silver are far outperforming traditional investments right now. Again, there's a reason for that. But even if you look back to 2000, gold is up 1,050%. Silver's up over 430%. The S&P 500 has done 244%, and the NASDAQ has done 366%. So ask yourself, where do you want to be? Is it stocks and the dollar, or is it gold and silver? You see, wise investing is just about risk management. So it's identifying the risk in the current scenario and then positioning yourself for that. Gold is far outperforming the markets, and there seems to be nothing but risk and uncertainty on the horizon out there with the US dollar, and of course, where we're headed as a country right now. So the dollar is plummeting, moving into recession. Countries are moving out of bonds and into gold, and we want to follow the countries and the banks. There's a reason that gold is up over $700 an ounce just in the last 3 months, right? Ask yourself where things are headed. And then again, consumer debt, all-time high. Household debt, all-time high. Credit card debt, all-time high. Car repossessions in the US, all-time high since 2008. Global debt is at an all-time high. US debt is at an all-time high. Fiscal deficits are at an all-time high, and gold is at an all-time high. It's not a coincidence. And with all of this going on, where do you think is the safest place to be? Doesn't it make sense to just open up an account and get something moved over so you have somewhere to run if things continue to deteriorate, right? Central banks, billionaires, and history are all telling us that gold is the right place to be right now. The bond market, equity markets, and currency markets are far too volatile for your retirement, and we see gold and silver doing their job incredibly well right now. So again, I would just challenge you, doesn't it make sense to at least open up an account with us and get something started, even if you're not so sure about gold and silver yet? Take the step and begin to learn so that when things continue to go bad, you can make that move easier and you know that you have a place to run to for protection. And the other thing I'd tell you, you guys have hung with me here. You're all, obviously concerned, and so you're paying close attention to this. You have to do your own research. But again, if you want to call us, we'll get articles out to you. We'll send you the stuff that I'm reading off to you here so you can actually see it for yourselves and really get a good sense and a good conviction of where things are headed in the economy and the markets and where gold and silver are headed. That's a service to you. Open up the dialogue with us, have a conversation, and let us direct you where you need to go. So if you feel like it's time for a change, and that's why you're here, go with your gut. There's never been a better time to get into precious metals than right now. And I want to thank you guys for sticking with me. We went a little long here. There's so much to cover. I always want to shorten these, but every time we get on to do it, there's just so much happening in the economy and the markets, and there's so much promise where gold is headed. So I encourage you guys, give us a call today, 866-607-2447. Even just do that right now just to have that conversation and get into your specific situation on how we can help you with gold and silver. I'm Mackay Block with American Hartford Gold. Give us a call today. We'll discuss how adding precious metals to your portfolio can really give you the hedge that you're looking for in these times. And again, I want to thank you for joining us. I'll see you on the next one. Mackay Block with American Hartford Gold.